what's going on in the San Diego real estate market in May of 2022. I'm Kyle Whissel with Whissel Realty Group, and I'm gonna break down everything you need to know when it comes to buying or selling real estate today. And now I'm excited for this episode because I feel like for the last 2 years, I've been a broken record saying the same thing over and over and over again. And we finally got a little shakeup in the real estate market, which I know shakeup and change makes a lot of people uncomfortable, but when other people are uncomfortable, it creates a lot of opportunity at the same time. So let's dive into it. If you've never watched our videos before, we always like to focus on the leading indicators, not the lagging indicators that the media talks about, which they're always talking about closed sales, how many homes closed, average sales price. Those are all lagging indicators that are usually 3 to 5 months behind, depending on what source you're hearing it from. Instead, we want to focus on the leading indicators, tell you what's been happening in the market over the last 30 days. Let's dive in. First thing we like to look at is the number of new listings that have come onto the market for sale. This is continuing to stay down. We're down 18.4%. There's just less people selling their home today than there were this same time a year ago. And when we get to the end of the video, we start talking about mortgage rates, I'll kind of tie this all together for you. So next thing is we've seen the number of homes going pending or going under contract is down about 18.8%. So both down 18-ish%. Now, you might say, oh my gosh, pendings is down. Does that mean the market's crashing? No, it just means there's no homes for buyers to buy. If there's a lot less homes coming on the market for sale, you can only have so many homes go pending. So whenever the new inventory is down, it's more logical that your pendings are gonna go down as well because there's just no homes for buyers to pend or to put under contract. Days on market, how long is it taking for a home from the day it goes on the market to going under contract or to going pending? That's down about 10%. We're running at about 18 days right now. And then last number we like to look at is the supply, or the number of homes for sale. That's down about 20% from the same time a year ago. So kind of natural, right? Pending 18.8%, supply down 20%. Those numbers kind of line up, right? If you have less homes for sale, the supply is down, you're naturally gonna have less that go pending. So those are all kind of what we would expect and what we've been seeing in the market for a while now. But where the big change is in the market is rates. The mortgage interest rates are up. No joke, they're up about 50%, not from last year, from last month. From last month, we were seeing rates in March and in early April in the 3s. We are now seeing rates in the 5s here in May. 5, 5.25. I've even seen as high as 5.5. If you're buying an investment property, you're in the 6s at this point. So finally got a little shakeup. Shakeup's scary. Well, guess what happens? When people get scared, that creates opportunity for you. So what we've seen happen is now this is not an exact science here, but I've seen, let's just call it a third. The bottom third of buyers have gotten flushed out. A lot of buyers who were just barely in a position to be able to buy. They were really maxed out on what they could afford in relation to what you could get for the dollar. Those buyers that were being really picky and didn't jump on the opportunity when the rates were in the 3s, they're gone. They can no longer afford to buy what they were able to buy just a couple of months ago. So you've seen a lot of buyers get washed out of the market. So what that has done is for the buyers that are still in the market, that's created opportunity because you have less competition today. So if you are a buyer who's still in the game, now you can go and buy a home. And now what we're starting to see is a lot of homes are no longer going for 10, 20% above what they're listed for. We're seeing homes selling for what they're listed for. So now you see that home that's listed for $1 million, where 2 months ago you'd feel weird writing an offer for $1 million. You'd be like, oh, well, that doesn't have a chance if I write at list price. Now that $1 million offer's got a really good chance of getting accepted. So that's a really good opportunity. Now you can come in, and if you see a home that's been sitting on the market 2, 3, 4 months, or 2, 3, 4 weeks, I should say, that's gonna create an opportunity for you to come in at list price, potentially even below, which sounds a little bit crazy, right? But what's happening psychologically for a lot of sellers right now is they saw all their friends sell their home in a week or two, and now their home doesn't sell after 2 weeks. They start to panic And now they open themselves up to taking that lower offer. So it's creating some opportunity for those of you that are looking to buy. And now, yes, it's gonna cost you a little bit more money, right? Rates are in the 5s right now. So you gotta be willing to take that rate in the 5s, so you're gonna have a little bit higher payment. Or what we've been having a lot of our clients do is get into an adjustable rate mortgage. Oh my gosh, scary, adjustable, that's what caused the foreclosures. No. Adjustables didn't cause foreclosures. Negatively amortized loans is what caused foreclosures, where you were able to buy a home that was a payment significantly higher than you could afford, but you didn't have to make that higher payment. They let you make a lower payment. But what happened is every time you made a payment, the loan balance went up on your loan. You were actually paying money every month and increasing how much you owed every month. It was a horrible thing, and that's a big part of what caused foreclosures. The other thing was that I bought a home when I was scooping popcorn at a movie theater for $500,000. Like, that should have never happened. That's what caused the foreclosure crisis. Like, that stuff, that's not happening again. It's not adjustable rate mortgages that caused it. It's the negatively amortized loans, and it's the fact they gave a kid at 20 years old a $500,000 loan scooping popcorn. That's what caused the foreclosures. Adjustables are great. I have an adjustable on my own personal residence. And so here's what's great with adjustables is we're seeing rates right now on adjustables in the 2 to 3% range. 2 to 3%. So most buyers don't even know these adjustable rate mortgages exist, or they know they exist, but they're so scared of them, they don't even take the time to learn about them. And they're saying, well, I can't buy anymore, rates are in the 5s, so I'm out. Well, the smart buyers, the ones that are working with our team at Whissel Realty Group, we're locking our clients in. I locked my own personal residence in at 2%, 2.0%. And we can lock you in on a rate like that as well. So here's what's great for you that's still in the game is now you can come in, you can buy a home, you don't have to overpay for it, and you can get a rate in the 2 to 3% range because some of the credit unions right now are seeing the opportunity to come in and earn some business by offering these adjustable rate mortgages. So we can definitely help connect you with that. So that's what's going on if you're a buyer. Now, if you're a seller, what should you do? Well, you gotta make a decision here, right? We have been on a really good run now for over 10 years. We're about 12, 13 years into a good run. You got to decide, I don't know if we're at the top. I don't know if we're right before the top. We're just past the top, but we're somewhere near the top of a market. A wise man told me if you can sell near a bottom and you can buy near a bottom, you can sell near a top, you're doing really well. So I don't know where the market's gonna go. I cannot predict the future because rates are changing faster than they've ever changed in history. I don't know how that's gonna play out over time. But what I know is there's still a good amount of buyers coming to the table paying great prices for a home. And if you want to cash in on all that equity that you've built over the years and have a little bit of degree of certainty and not worry about where the market's going to go in the future, whether we go in recession, rates go to 6, 7%, I don't know where it's going to go. But could be a really good time if you want to eliminate any of that risk and you want to cash in, know exactly where the market is today. We're still getting amazing prices, still plenty of buyers that are buying. Could be a really good chance for you to cash in on all that equity that you built. So whether you want to take advantage of one of these adjustable rate mortgages and beat your competition and only pay list price now, or you want to sell your home and rule out the risk of where the market's going to head in the future, give us a call, shoot us a text at the number down below. That'll connect you with my team where we can learn more about you, your goals, and put a plan in place to help you accomplish them. I'm Kyle Whissel with Whissel Realty Group. Thanks for watching.